Welcome back, everybody. My name is the Main Street Investor, and today we are going to be reviewing the cosmetic giant Ulta Beauty. For anyone who is not familiar, Ulta Beauty is the largest beauty retailer in the United States, and they provide cosmetics, fragrances, skincare products, hair care products, and salon services. They have locations in every state throughout the US, but of course, their largest markets are going to be the states with the highest populations. So that would include states like Texas, Florida, New York, Illinois, and California. But even in lower populated states like Alaska, they still have 3 locations. In Wyoming, they have 4. In a place like Rhode Island, they have 4. So they're in every state and they're well established in every state. I could not find an investor presentation released with their earnings on Thursday, but I did find a PDF that outlines a lot of the changes. And so the first thing that popped off the page to me is that their comparable sales increased by 4.5%, which is always great to see for a retail company. Compared to last year, their net sales increased by 6.4%. The comparable sales are up by 4.5%. And this change was driven by a 5.9% increase in the transactions that occurred, but a 1.4% decrease in their average ticket, meaning people are coming in more often, but they are spending less when they come in, but only marginally less. Gross profit increased by 3%, but I do want to point out that their profit as a percentage of net sales decreased to 39.9% from 41.2%. So we are seeing margins starting to shrink just a little bit compared to last year. And that we can see is largely a result of a 10.8% increase in their selling, general, and administrative expenses. So their input costs are going up, the costs to run the company are increasing, and so as a result, their margins are decreasing. And the final things I wanted to highlight is that the company has been repurchasing a ton of shares lately, and they do still have almost $260 million remaining on their repurchase program that was announced in 2022. That is approximately the same amount of money they spent in the most recent quarter. So we could see up to another approximately 600 to 700,000 shares of Ulta at its current price being repurchased by the company. That's always great for shareholders, and so it is a positive to see. Ulta has opened up 12 new stores in the most recent quarter, and that brings their grand total for the year up to 20 new stores. So the company is still expanding, although that expansion has definitely slowed down since their growth phase over the previous decade. And then finally, I did want to point out that their fiscal year 2023 outlooks have been updated a little bit. They did increase the number of comparable sales, slightly narrowed their diluted earnings per share range in a positive way, increased their share repurchases by approximately $50 million, and they narrowed their range for capital expenditures down to the lower end from $400 to $475 million to now just $400 to $425 million. So the company is expecting to potentially save about $50 million. Following the company's earnings announcement, Ulta has absolutely taken off. The company beat on their quarterly earnings and revenue goals, and their same-store sales increased more than Wall Street was expecting. What's important to note is that although Ulta did beat its earnings, their EPS over the last year did fall by about 5%. And this isn't necessarily the worst thing, as 2022 is a pretty solid year all around for all retail, so it's a pretty bad comparable number. So a 5% drop actually isn't too alarming, especially when you combine it along with a revenue growth of about 6% and the comparable sales that increased 4.5% versus the expected 3.3% increase. And as I mentioned, the company has increased its sales predictions and their expected same-store sales predictions. So all in all, Ulta is expecting to do better than they had originally anticipated. The stock was up over 11% during post and pre-market trading. And as you can see from the screenshot that I took, Ulta is still holding its open price, which at the time of recording means the company is up 11.5%. And before we move on to the financial numbers, please take just a split second to smash that like button and subscribe to the channel if you enjoy these type of stock reviews. Thank you so much for your time, and with that, let's get into it. Ulta's revenue has grown really nicely at about 12.5% per year since 2018. And besides a hiccup in 2020, EBITDA has grown really consistently as well. Operating earnings look much the same, with an over 23% year-over-year increase for the last 5 years. Gross margins were expanding nicely and have held steady around 43%, which is pretty solid, especially for a retail company. Operating margins have been great, hovering around 15% for the last few years. And return on assets has also been growing to about 20 to 25%, which is really good, especially when you compare it to more typical retail companies like Target or Walmart. As we saw earlier, Ulta has been steadily repurchasing shares and they've gone down by about 4% per year, which is excellent for shareholders. The company's cash and short-term investments has been quite variable, but we can see that it tends to hover around $400 million, which is a pretty solid buffer. Ulta did take out its first long-term debt in 2019 and it's held very steady at about $1.9 billion ever since, which should be a pretty manageable number for the company, and considering the time that they took out that long-term debt, it should be at very manageable interest rates as well. And of course, we can see that it's very manageable because the company's net interest expense is actually positive for the previous couple years, even though they have far less cash on hand versus the amount of debt that they hold. So that tells us that the debt that they hold is a fairly low interest rate and should be very manageable. The company's free cash flow has been expanding really nicely, although there has been a little bit of a drop off in the trailing 12 months, largely due to an increase in those expenses, as I mentioned earlier. On a per share basis, free cash flow looks basically the same. So the only thing we're going to be looking for is for this free cash flow number to continue to increase, even if it is at a slightly slower pace than it used to be. Ulta's average PE over the last 5 years is 25.5, although we can see that it's varied quite a bit, especially in 2020 when the company saw a lot of its earnings go away due to people not being able to leave their homes and visit the stores, which makes a lot of sense. So that's why we see this major spike on this graph. It's a result of Ulta's earnings temporarily dropping, but they immediately came back and are sitting at a more normal level already. So I would argue that the average PE of Ulta is probably a little bit lower, sitting around maybe 22 or 23. And the company's PE at yesterday's close was 16.35, which represented a 35% discount over its long-term average. Of course, as I showed, Ulta is up about 11% today right now, and that suggests that its PE today is probably sitting around the low 20s, back around a more normal level. And so to check out the value chart, we can see that the fair value PE of Ulta over the last 5 years has been 23 due to the company's growth rate. Although I do want to point out that the projected CAGR of the company for the next 5 years is only 6.24% per year. So we should expect the PE to start to mirror a company that is not growing as fast as it once was. Therefore, I think a good starting general PE is always 15. And when I do make that change, we can see that Ulta looks like it's slightly overvalued, especially considering the fact that its growth is only going to be about 6%. What I will concede though is that the cosmetic industry tends to be quite defensive. People will buy cosmetics in any type of economic scenario. And so you could argue that Ulta does deserve to have a bit of a premium attached to it due to its defensiveness and the fact that its revenues will probably not experience too much fluctuation as long as the company is continuing to perform and market well to consumers. So in fairness, I'll add a fair value PE of 18. And with that, we can see that the company, at least according to yesterday's close, was a little bit undervalued. But I do want to point out that the company is now trading at about $475 per share, which by my calculations would be slightly overvalued. But with that said, we can see that at the end of 2024, I expect the company to be worth about $485. About $515 by 2025, and just under $550 by 2026. So if you are purchasing the stock today, there is a chance that you're at least getting a fair value for a very good company, although I would argue that there is definitely no margin of safety here. So to summarize what I really like about the company, first and foremost, I like Ulta because cosmetics as an industry are just very stable. Like I said, people tend to purchase cosmetics in any economic environment because everybody wants to look and feel their best, and that's what cosmetics help people do. Secondly, the company has really great financial performance. Basically, all metrics look really good. I like how the company is run, and management has done a good job of balancing growth with being financially prudent. And finally, Ulta is very shareholder friendly. They're doing tons of buybacks all the time. And it does appear to me that the company only invests when they see that they can make a very solid return on that investment. So in all, I think the management team has done really well. The company as a whole is really solid, and there's really not much to hate about Ulta. But of course, I'm going to do my best to try and find things about a company that are not good or you should at least be aware of. And so the first thing that I don't like is that the company's growth phase is likely coming to an end. As I showed, they're in every state in the United States. They have hundreds of locations already in the largest states, and they have several locations even in like the least populated states. So I don't imagine that there's a ton of major growth left for Ulta. Can the company continue to grow a little bit over time? Sure, absolutely. But my experience is that you don't need an Ulta in literally every street corner like you would a grocery store or a gas station. And so there's probably going to be a limit coming up where Ulta just doesn't have much room to grow into new markets. I think some people on Wall Street haven't quite grasped that, and that's why the company still trades at a premium that's probably a little higher than I would give it. And second, the rising expenses and falling margins is a little bit of a worry, but that is just a little worry currently. It's only a small 1 year trend that we're really seeing this major issue. And if inflation reports are anything to be believed, we should see that the input prices start to stabilize for companies like Ulta, and that should allow management to better control their costs and keep things at relatively stable margins. So I'm not too worried. And with that, my final thoughts are that Ulta is an incredible, incredible company. I really like Ulta as a company. I cannot understate that enough. For me personally, I don't see a margin of safety that is good enough to consider it an investment for me. But I will say that the company does not look to be overvalued, or at least not terribly overvalued. And so I think if you're planning to hold this company for the long term, this is probably still an okay price to invest in the company. Of course, you're allowed to do whatever you want with your portfolio, and this is not financial advice. These are just my thoughts. And so with that, I hope you guys have a wonderful day. Thank you so much for taking your time to view this video. And please just take one moment to double check that you hit that like button and subscribe to my channel. I have tons more content ready for you guys. So good luck with your investing and have a good day.